Welcome back. I'm Pratap here. Today is the 21st February 2025. In this video, I'm going to focus on three topics. The first one is 5 minutes HLQ supply zone from NIFTY supply demand zone chain report. The second one is our regular topic, performance of the high liquidity zones generated from our yesterday's end of the day report. And third one is a Tech Mahindra piercer zone strategy. Because yesterday I suggested you when we are finding the stocks near 75-minute zones. So we have seen Tech Mahindra, he's pierced 8 times. So that's why I got some interest and I suggested you focus on this piercer zone strategy for those who are comfortable with piercer zone strategy. So let us see what happened today in Tech Mahindra. So these are the three topics. Even before that, please understand we are providing complete free training on supply demand zone price action. Some of you might be knowing the cost of the training is over $8,000. Even then we are providing complete free training and all the training lessons are available at our NeoStock YouTube channel. At our channel homepage, click on the tab posts. Some of you might be seeing the tab community. Click on the tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course YouTube playlist. So here I kept all the training lessons. You need to start your training from lesson 1.1 that is available at the bottom of the page. Just scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one according to the training instructions I mentioned at our Telegram channel. I provided the link to our Telegram channel in this video description. So join in the Telegram channel. At the top of the Telegram channel window, you can find pinned messages. So click on the pinned messages. There you can find all the training instructions. So please learn the course according to my training instructions. Then definitely you will become a very good independent trader. Okay, now let's get into our analysis discussion. So the first topic we will focus on NIFTY. Look into NIFTY yesterday's supply demand zone chain on the 5 minutes time frame, yesterday end of the day report. Look into the date. And look into the serial number 58, the item. This is the most recent 5-minute supply zone to the current closing price. This is the nearest. I should not say recent. Maybe the right word is the recent, the nearest to the current closing price. This is the supply zone. And what kind of supply zone it is? It is a high liquidity supply zone. Already tested 4 times and 10 rejections from this zone. And today we got a trade from this zone. But below we have again another high liquidity demand zone. Already tested 12 times this one. Last 2 days continuously you got trades from this zone. I think last 3 days, not 2 days. Even earlier also it gave good trades, this high liquidity zone. And today this high liquidity demand zone got the expiry period. But even before that, you got the trade from this zone. Straight away you can take a trade from this zone. I remember yesterday one of our members asked a question. Sent a message to even my LinkedIn. He was asking about, can I go for option buying? That is, go for a put or calls buying depending on the zones. But the problem is with the options is you should have very good expertise in options when you want to go for. Yes, in the high liquidity zones directly you can buy the options. In the demand zone you can go for the call option, or in the supply zone you can go for put options. You can buy them. But the problem is risk management. How well you are managing. That is all depending on how well you trained in your options. I am not comfortable with the options because that is not against my trading style. Because always I want to be very strict with my risk management. That's why I am not good with the options. But if you are good with options, and these are demand and supply zones, because that is the place where you should go for long and short. Demand zone you go for long trade, and supply zone you can go for short trade. Especially in futures and cash segment, the risk management is very, very easy. Especially in the intraday. Cash segment also, because your broker might be giving 4 or 5 times margin they will be giving in the cash segment. The only thing is, in the cash segment, you have to exit probably at 2:30 or 2:45, whatever the time your broker fixes. If you go with futures, you have the flexibility. Even 1 minute before trading session also, you can exit from your trade. So that's why when those who wants to use options, please make sure you have a very good skill in options. And I am frankly telling you, I don't have good expertise in dealing with options. So that's why if anybody wants suggestions related to options, probably I am not the right person. Please understand this point. Okay, anyway, we got a short opportunity today at the supply zone, 5-minute supply zone. See, I told you these 5 minutes demand and supply zones, directly you can take trades. But only thing is you can't expect 80% success rate. Sometimes it will be giving you continuously very good success. Sometimes maybe some of these zones might be violated sometimes. Maybe you get a success rate up to 55 to 65%, or maybe a little over 65 also, maybe up to 70% also you may get success with these zones. That itself is a huge success for supply demand zones point of view. But our high liquidity zone strategy, that is the highest level of the success, up to 80% we are able to achieve. Only last month only we got 75% success rate. But in general we get 80% average, more than 80%. But anything above 55 or even 65 up to 70%, it is a very good success rate. So that is the reason why I am suggesting directly you go for long trades or short trades. 2 days back also I told you, go for a long trade in the serial number 59, whatever the demand zone you are using. 2 days back we don't have the supply zone, because the 19th only it is created. And today we got today morning what happened? Prices entered into this zone at morning 9:20 candle. You got a very good trade here. Let's go to the 1 minute. You get better clarity, so that you understand how much time prices stayed in this zone. See, price entered into the zone at 9:20, 9:21, 9:22, 9:23, 9:24, nearly 5 candles. Prices are within this zone. That means you should not have missed this trade at all. Because many times price goes short, fraction of second, again it will go back. Sometimes you may say, maybe I missed the trade. But you don't have such kind of excuses here. You must take this trade. See, after that, NIFTY gave you 170 points move till this 15 minutes zone, high liquidity zone. Here we have a 15 minutes high liquidity zone. Let me go to 15. 6 months back or 7 months back, that zone was created. In June month. This is the one. On 6th June 2024, this zone was created. And also it is having LOTL also, drop base rally. And it is having a fine-tuned 3-minute zone. 5-minute structure was not good. I have drawn 3 minutes. And this I already explained you in NIFTY analysis video. I think in January 14th or 15th, we have analyzed NIFTY monthly demand zone. At the time we have drawn these zones. Here I have drawn this drop base rally, I have drawn follow through candles. But actually our software suggested this one, high liquidity zone. This drop, 2 base candles, rally, follow through candle. This 15-minute zone is suggested by, I think, 3 base candles here, because software always suggests wick to wick. This is the drop, this leg candle is also part of the base, and next leg candle is the leg out. That way, but I have fine-tuned up to type 2 proximal. Okay. And today it reached this 15 minutes target zone. And see here, this is the morning. Let me go to 5 minutes candle. This is the morning 9:20 candle, 5 minutes candle. And we have seen 5 minutes the prices are within this zone. And after that, sharply prices moved down, moving down, and finally reached this 15 minutes high liquidity zone. That way Nifty gave you 170 points. Here you will ask, definitely you should raise one question. But before reaching this 15 minutes high liquidity zone target, we have a 5 minutes demand zone that is already working for the last several days. See here, 59. Already tested 12 days. And today this zone got the expiry date. How do we know today we will get? No, that's why I didn't say. I did not said we will get expiry date. I said it got the expiry. We know only after the zone is violated. Now again you will raise a question many times. We will take a trade here. Already I took a trade here, got a success. Earlier I got a trade, got a huge success. Even before I took a trade, I got a very big success. Again I took a trade here, I got a great success. Continuously every day. Similarly the same way today also I would have taken a trade. But if you take a trade here, your trade will be stopped out today. Because you enjoyed all these days, all these profits. But before you get this trade in the demand zone, you already got the first trade in the supply zone you got. You go for a short trade. Okay, do I book the profit here? It's up to you. Mostly you might use 1 minute trailing stop. Sit until it reaches the 15 minutes target. The target, not even a single 1 minute supply zone is violated. Let me go to 1 minute. Let us look into the trailing stop. See all these zones. See here we got the trade. Here 1 minute zone is created. Rally, base, drop and pushed. And the next supply zone you see here, drop, 2 base candles and a drop. Next again you see, drop, 2 base candles and a drop. Next you see, rally, 2 base candles and a drop. This is a medium size candle. Now it reached the 15 minutes target. Now what is your, because it reached the, not 15 minutes target, 5 minutes high liquidity zone it reached. Now you might be having a dilemma whether to book the profit and go for a long trade or continue this. If you want to continue, if you decided to continue, then you will keep this rally base drop. If this is violated, you will exit when this zone is violated and you will book the profit. Rally, after it reached the 5 minutes high liquidity zone, you should actually strictly start implementing your trailing stop because it reached 5 minutes high liquidity zone. Many times high liquidity zones does not let the prices reach 15 minute zone. See, all these days, this 5 minute zone does not allow the prices to reach this 15 minutes target. And one very good thing is, when prices reached, before reaching, you have a rally based drop 1 minute zone. Now you should start using trailing stop. Earlier, mostly you may not be using trailing stop. But I am trying to tell you, none of the supply zones are violated today. Let's draw this 1 minute first supply zone before our prices reached the Okay. If this is violated, immediately you book the profit and close your short trade. Is that happened? Prices entered into the zone. Again moved up. Now again a rally based drop is created. Now this zone is almost the same as booking the profit at our 5 minutes high liquidity zone. So now what you do? You revise your target. Now this will be your new target. Sorry, target means trailing stop. This will be this new trailing. If this is violated, you will exit the trade. Is it violated? No. Is there any new zones are created here? Here drop, base, drop and follow through candles. The next zone. Now immediately you will update. This rally base drop. Next again drop base drop. Now immediately you update our trailing stop. Now reached 15 minutes high liquidity zone. And while it reached, this 5 minute zone is completely violated. And who is the responsible for this entire zone violation? Here you will be having some 5 minute zone. Probably that could be the responsible. I am going to the see here. At the 5 minute zone, you have a zone is created. This is the 5 minute supply zone. And this 5 minute supply zone is responsible. That means this 5 minute zone, the order flow could be much stronger. That's why, because institutions, what they do while violating this high liquidity zone, they create a zone with huge order flow and make sure that the zone will be violated. Probably institutions might have added huge supply into this 5 minute supply zone for violating this 5 minutes high liquidity zone. Because a huge order flow, mostly this zone will act as a high liquidity zone. Mostly. Will not say always, but mostly. See, today it is tested multiple times. Why I drawn? I just want to tell you, today again this zone gave you several trade opportunities. Let's focus on that. First, it is violated here. So, because it reached a new 15 minute zone, now probably this is the area you should book your profit. In case, if you did not book the profit, you are expecting even more profit. Now, in the 1 minute zone, what happened here? Here the zone is violated. Maybe small entry buffer, stop buffer you keep, small buffer, not huge. Somewhere here, you might have exited your trade. If you exited your trade, you would have got more profit, but some of your profit might have been reduced if you did not book the profit at the 15 minutes. If you book the profit at the 15 minutes, you would have captured 170 points in NIFTY. And who helped you to get this kind of trade? Our supply demand zone chain. NIFTY, Bank Nifty supply demand zone chain. It's a very powerful concept, NIFTY supply demand zone chain. And also please remember, because today Money informed me, some of the members are asking for only NIFTY, Bank Nifty supply demand zone chain reports. Please understand, NIFTY, Bank Nifty supply demand zone chain, we are not publishing separately. It is part of the existing report. Maybe you are asking a separate NIFTY, Bank Nifty, hoping that prices of that subscription will change. But please understand, I clearly explained in the premium subscription video, the first premium subscription video, whatever the 5,000 rupees price is a very cheapest price we are offering to support retail traders. The price is also fixed by some of you guys only. But that 5,000 rupees does not really work out for me, for the kind of effort I put. That is the cheapest price I am offering. It doesn't work out. At least I should have a premium report. So if I price with 30,000 rupees per month, if I have some at least 20 subscribers, at least I get some decent money. But am I going to get that? No. I am offering at 30,000, very discounted price. Nifty, Bank Nifty. Do you know what is the price of Nifty supply demand zone chain report every day? See, any supply demand zone chain report, if you want to buy on any day, you have to pay 1000 rupees. There are some people brought these supply demand zone chain reports for different stocks by paying 1000 rupees. Up to, from monthly time frame till 5 minutes time frame, I generate and I will send the reports to them. Either through video report or maybe screenshots, either way. 1000 rupees is I'm charging for a single day. Look into our first premium report I published. There are clearly I described all the prices. The first premium report, I think in the month of August, right? Just I think 2 or 3 days before August month, I have published the premium, all the packages and everything. So 1000 rupees you are paying for a single day. 30 days, how much money you will pay? Okay, 30 days won't be working days. You might be having 20 working days or 22 working days. How much you will pay? 22,000 rupees you will pay. Only Nifty. Bank Nifty, another 22,000. Okay, roughly I say 20,000. 20 plus 20, 40,000 rupees you will be paying. But today you are getting just for 5,000 rupees. Not only Nifty, Bank Nifty, you are getting daily or 75 minutes high liquidity zone. Actually, those reports are much expensive than Nifty, Bank Nifty reports. Daily 75. Because no strategy in the market is giving 70%, I mean up to 80% success rate. I mean more than 80% success rate. Only if you ask me what could be the real value, monthly value we can pay for only Nifty and Bank Nifty without discounted price. Only Nifty and only daily and 75 minutes high liquidity zones. Generation report, I say 50,000 rupees per month is a reasonable cost. I know these prices are not applicable for retail traders because we can't afford that much money. But there are people, many people, individuals, they trade with high values. They invest like 10 crores, 15 crores, 20 crores rupees and they will be playing in the market. For them, paying 50,000 rupees, just nothing for them. What they want stocks that gives better success rate. That's it. They don't bother about the money. Because their value is huge. They are investing some 10 crores rupees or 15 crores rupees or 20 crores rupees or even 2 crores or 5 crores rupees. Also for those people, for those traders also, 50,000 is just nothing for them. $50,000 means, you know how much? It is like 50 divided by 20. It is like they are paying some 2,000 rupees per day. Do you think that they really worry about 2,000 rupees when they get lakhs of rupees profit every day? Maybe they are getting 50 lakhs rupees profit, 80 lakhs rupees profit. Or even worst case scenario, they are getting 5 lakhs, 6 lakhs rupees profit. Do you think they really think about the 2,000 rupees or 3,000 rupees? They don't bother about. That is the least. It's just like peanuts for them. That's it. They don't really care about it. But for us, 5,000, yes, we all feel 5,000 is a big money for us. Yes, it's a big money. Because our investment is very small investment. That's why what I did, I combine all these things and I'm offering at least useful, because I know there are different kinds of traders. Those who trade only Nifty, those who trade only Bank Nifty. Some people trade both Nifty and Bank Nifty. Some people trade only bullish and bearish trade setups. Okay, now you land high liquidity zones. Good number of people from our subscribers, now they are trading high liquidity zones. Some people trade by using their own trade strategies. They always look for prices stayed in demand and supply, closed inside demand and supply zones for higher time frames. Daily and above are called as higher time frames. Based on that, they prepare their own strategy, some people. That's why every day I am publishing for daily and above time frame, price closed inside the demand and supply zones. Because I have some subscribers, senior subscribers, who trade supply demand, who are trading supply demand zone for the last 10 years. For them, these price closed inside demand and supply zones are needed. They don't bother because they have their own personal strategies. But only thing is they are not finding the zones where price closed inside, because they want to search 200 stocks. After searching 200 stocks, they will find only few. Again, those zones they need whether EMA confluence is there or not. If EMA confluence is there, they will use those zones as HTF zones and they will trade. How they will be trading experienced people, that I will be explaining. In training, the ongoing lesson 29, I will be explaining. In next 1 month period or 1.5 month period, you will be learning even those concepts, how experienced people are using price closed inside demand and supply zones. At some point of time, you should also learn. Why they are not using bullish and bearish trade setups or other things? Maybe their olden days they are not aware of this concept. First of all, high liquidity zone concept is a new concept. Already they build their own trading systems. They are comfortable with some kind of system. Only thing is they want efficiency should be improved in their work. Because a software is there that is easily finding all those zones. So that their time will be saved. Earlier, if they search 20 stocks, probably they will find one stock where price closed inside the zone. For manually searching 20 stocks, at least they should spend some 1.5 hour or 2 hours time. Now, in just fraction of a second, our software generated. Now they know all the already readily available stocks. Price closed inside demand and supply zones. That way they will be using. See, all these things I am merging and giving you as a single. Whichever the one you want, you can use. But if you want individually each and again, the cost is same. Probably the original cost is more. That is what I am trying to say. Everything individually, if I sell, I can sell it for 20,000 rupees. Individually. But combined everything, you are getting 5,000. That's why in the first premium video, clearly I mentioned, that is the cheapest cost I am offering this. 5,000 is the cheapest cost, whether you believe or not, that is true. There are some people drawn scripts in TradingView. Many of you are aware. TradingView, it draws the zones. Some people developed the scripts. It shows demand zones or supply zones. But does it really effective? No. Because no concept that identifies high liquidity zones that gives success rate. No concept that provides bullish and bearish trade setups. And none of those scripts provides the price closed inside the zone and having EMA confluence or some other properties, zone confluence. Such kind of facilities, are they available in that scripts? No. TradingView, whoever, because I know some 4 or 5 people, different people, they developed the scripts. Because I have seen some 6-7 years back, one person from, I think, Europe, he developed a script in TradingView for drawing the zones in TradingView. And it is an open source code. And now all the people, especially in our India, many people used those scripts and they upgraded that script. And now they are saying they are generating supply demand zones. Readily they are available in TradingView. Automatically draws the zones. What is the use automatically draws the zone? Is there any guarantee that the zone works very well? What is the use? Is those tools telling you what is the trend in that particular stock? Because when you want to calculate, they should compare multiple time frames. Lower time frame, higher time frame. Even after identifying what kind of zone it is it a high liquidity zone? Nobody knows that logic behind it. So that's why, please understand, I am offering this at cheapest cost. Asking separately, it is meaningless. If you are what kind of trader, you will use those reports. Some people, they learn everything, they will enjoy all these reports. Some people trade only Nifty, Bank Nifty. They focus only on the Nifty, Bank Nifty. Ultimately, these concepts are helping you earn the money or not. That is important. Suppose you got some, in a month you got, for your small capital, you invested only 2 lakhs rupees small capital you invested. Using the 2 lakhs, you got some around 30,000 or 40,000 rupees profit, let us assume. Forget about the 5,000 rupees that you paid for the money. Still you got good money. Who helped you earn that money? These reports. When these reports are helping you get good money, why do you want to worry about the 5,000 you are paying? You should feel happy for paying the 5,000 rupees. We should not cry, okay, I paid 5,000 rupees. If I would not have paid the 5,000, instead of 35,000 rupees profit, I would have got 40,000 rupees profit. How to save that 5,000 rupees? Don't think like that. If you think like that, you won't get the other 35,000 rupees also. You have to understand. But before using these reports, make sure what is the best way to use. Because recently already we discussed. Many of you compromised with dividend adjustment. Used brokers charts. They did not provide dividend adjustment. You didn't fine tune properly because dividend adjustment is not there. The levels are changed. The levels are changed, automatically your trades will be stopped out. Some people lost money like that. Despite the fact I clearly explained dividend adjustment in our training lesson 9.1. Part 1 of lesson 9 clearly explained dividend adjustment. You learn that subject even then. And some people who already learn supply demand zones outside somewhere, they are not aware of this dividend adjustment because nobody is explaining those concepts. Straight away they come and they took the subscription and they are, because they are feeling we know everything in supply demand zone, because they are thinking last 2 years or 3 years I am using supply demand zone. I am an expert. That is the way people are thinking. Nobody is expert here. Even after knowing all these things, after developing all these things, still I don't believe I am an expert. But people having 2-3 years experience in supply demand zone or even 4-5 years experience in supply demand zone, they are thinking they are experts. I remember one person sent me a message a few weeks back in my LinkedIn, claiming himself he is using supply demand zone for last 5-6 years and he is saying I am an expert, I know everything. When I suggested him complete the course, took the subscription, and finally after 1 month he said all my zones are getting violated. The reason? He didn't adjust the dividend adjustment. I told him, why you didn't do this dividend adjustment? He said, I am not aware, I never used a dividend adjustment earlier. Then immediately I told, these are the reasons why I am asking you to complete our training course, even though you learned earlier, even though you have 5-6 years experience. Not only because of dividend adjustment, there are many new concepts I developed. Price direction is one concept I developed. Hidden zones and hidden bodies is a new concept. Nobody is teaching those concepts. Lesson 22, lower time frame zone as an horizon to the higher time frame zone. In trend, higher high, higher lows based trend calculation, I developed equal high and equal low. That is a new concept I developed. Many strategies, zone confluence strategies I developed. Pierced zone strategy I developed. First of all, pierced zone itself is a concept I developed. There is no concept pierced zone in supply demand zone existing theory. Why I developed? Because all these strategies, by making use, we are identifying interesting things. That is what you learn in lesson 28, pierced zone strategy. All these days before lesson 28, you might have thought pierced zone is a waste zone. The moment you learn lesson 28, your perspective is changed immediately. Now you are understanding, maybe this is the zone we have a powerful. That's why today we are going to focus. Already 2 or 3 examples we discussed in our earlier HLQ analysis video. Today also we will discuss. Because yesterday I suggested you focus on that stock. See, actually, I know I deviated from our main discussion, but still, why I want to tell, because some of you people should not get into a wrong understanding. So, final conclusion, the price I am giving for these reports, everyday reports, is a discounted price. For a single package itself is a discounted price. Remaining all packages included, they are bonus to you. If anybody asks me, I want to buy only single package, I can say still the cost is more than 5,000. But after discount only you are getting 5,000. Whether you take single package or the whole package, it doesn't make any difference. Single package itself I am offering you at a highly discounted price. Then remaining all things are all extra bonus for you. Please understand. So prices and all won't be segregated to different things. If you are expecting such kind of things, it's like I am degrading my software value. I can't degrade the software value when it is giving good results. But only thing we have to understand how better you have to use these concepts without making mistakes. I know people made mistakes. I have seen one person recently. I don't want to name, because especially one more point also you are thinking. Some of you people are taking suggestions from money. Please understand, money is not an expert. He is also just learning like you guys. He is helping me in doing some of my activities so that my effort will be reduced. And some of you are taking his advice. Some of you are interacting with him regularly, it seems. I also warn him strictly. And he is also enjoying by giving some suggestions when people are asking. Please remember, he is not an expert. He is not the right person. If you want to send any personal message, send it to my LinkedIn. And LinkedIn also I have a lot of concerns. LinkedIn is a professional network. You should not send requests with fake IDs. I know who are all send the fake IDs. I have a close observation on them also. If I look into your profile, you won't be having any education background, you won't be having any things. And some of you are using my LinkedIn account as a basis to add members into your LinkedIn account. Don't do such kind of silly things. I know all kind of tactics people will use. I know how people will play. I am already, this is not the first time I am into the business. I've been into the business since 2008. I know what kind of tactics people will play. When I am giving an opportunity to you to interact with me, you utilize that opportunity. And don't do any other place. And one more thing, people should be very careful when you are dealing with people on the internet. Because all you people, do I know any one of you personally? No. All are new people. And here we have some people who are very sincere, they are there. We have some frauds also here. Every day several people will be interacting with me. Some of them are very sincere. Some of them are acting like a sincere. Some of them are frauds. I know their intentions in the first interaction itself. And some of the people's interaction I will understand over a period of interaction with them. Why I asked LinkedIn? Because I know LinkedIn is a professional network. If you are a true professional, all your details will be reflected in your profile. Your work experience, your education experience. Look into my LinkedIn profile. If you are already a good experienced person, you've been into the LinkedIn and you updated properly, the other people who interacted with you in your profile will reflect. Some of the members would have given recommendations to you. All those things, what kind of recommendations they gave it to you, they all will be available in your LinkedIn account. That way we can judge whether your account is really a true account or a fake account. Suppose even not enough information is there, by seeing your work experience, your education background, We can send inquiries to your colleges or your previously worked companies, and we can get the feedback. Why professional network? Why we are providing the details about, so that people will inquire and they know about your experience is real or fake. First of all, you are a real person or a fake person. There are so many inquiring agencies are there. They do that business. I hand over your profile to them, LinkedIn profile. They inquire about your past experience and they confirm whether you are a genuine guy or a fake guy. And you are not providing any details in your account, immediately that itself is a confirmation that you are a fake guy. A fake person is interacting with me. That is how I assume. I repeat again, that is how I assume. I might be replying you. I might be asking, clarifying all our doubts, but still a point will be there in my mind. Maybe this guy could be a fake guy. Maybe you are a genuine guy. Maybe you have other reasons for not mentioning your other profiles. But doubt will be there in my mind. Because when I am openly interacting with you, I also expect I should know about the person whom I am interacting. I should know something about you. When I see your LinkedIn profile, you will be studying the first class. That is the way you update in your LinkedIn. Do I think that a first class student studying first class or second standard or second standard is interacting with me about supply and demand zones? Do I assume like that? Is it not fun? Nothing will be there in your LinkedIn account, but you are all interacting with me. How do I consider? I have to consider you as a fake person only. When I assume fake person, obviously certain things I can't communicate with you. When you are a sincere guy, my communication with you also very sincere. When I feel you are a fake person, or when I confirm you are a fake person, either side, my communication with you is only limited, not unlimited. Please remember. People wants to try with me in a different way, so many ways. And some people will send some kind of messages, spam messages. I know when you are sending spam messages, you know what kind of tricks you play. The link, if I click, I will be get caught with your link. Some hackers will be trying to do. But am I a fool? I know. I am a software guy. I am into the software guy. I know how hackers will be behaving. We studied all these things. I have all sort of protections to handle my system. I know what is there in each and every link I am receiving. I know what link I should open, what link I should not open. If I really want to open a particular link, I want to see, I have my own test machines. That doesn't affect even if you send virus through that link. See, if I am a kid, you people can play with me. I am not a kid. I am a highly experienced person. I have seen all these things a very, very long back. You can't easily play with software guys. Please understand. And it is not easy to play with highly experienced software guys. That is also you should understand. And some people just for time pass, they will be sending messages. No use with that. It is a professional network. There should be a clear need is required. I'm sorry, I'm taking your time, but it is essential. Probably this is the right time to clarify certain things. That's why I want all you people update your LinkedIn profiles with your clear details. At any time, if I get a doubt about you, I should contact the agencies who will inquire about you and provide your details. At least I know that confirmation this is a genuine guy. I can communicate frankly with this guy. If you don't provide anything in your LinkedIn, how do you? First of all, LinkedIn itself is a professional network. Why people are joining in LinkedIn and providing all the details? Once you are in the LinkedIn network, it is an indication that any agency who inquire our profiles, we are giving permission to them. So all the people in the LinkedIn, please try to be in your limits. This is the first point you should understand. No place you have to do here. Playing is not good for you. And third thing is your profile should be real. They should not be the fake profiles. Your profile should not be the fake profile. I can give you so many, I can give my other social media networks like Facebook or Instagram. Why am I avoiding all of them? Because they're all the fake networks. Fake people will be there. LinkedIn professional network. Fake people can be identified easily in LinkedIn network. But it is not easy to identify fake people in the other social media networks like Facebook or what is the other one? Instagram. So this is the reason why I have chosen and if you want to fake even LinkedIn, easily you will get caught. That is what you are not understanding. The funny thing is, you can't do the same way how you do in Facebook or Instagram. That's not easy here. Easily you will get caught here. So that's why all the members, please update your and moreover cancel your fake if you really wants to communicate and if you want to build my trust. See, building my trust is very, very important. What I do, if I got a confirmation you are a fake guy, I stop answering all your queries. Any important question you ask, I won't respond. Who is the loser? I am not the loser here, right? I expect a genuine profiles from you people. If you don't have a genuine profile and you then don't interact with me at all. Do your work and I will do my work. I'm sorry to say this, but this is the reality. The world is like this. And another important thing is other people who are genuine, you be careful with the fake people. Because many fake people are scammers. They act like they are very good. They act like they are very polite. And one day they will be started asking you, pay the money, some money, because I need urgent money. Urgently I struck up, please pay some money. Within 20 days I will pay the money back. These are the requests you will be getting. Because all these days, so nicely, so politely, that person is interacted with you and you will get attracted. And you will pay the money and all of a sudden he will disappear. Never pay any money to anyone, whatever the way they ask. Scammers' main goal is to get some money from you. Never share. It's a very dangerous, the most dangerous thing is paying money to unknown person. Whatever the reason it could be. And we know one scam also previously I discussed that happened with us for our premium subscribers. Some scammers asked for, okay, we will combine and we will take a account. Let us reuse the account. I will pay 1,000, you will pay 1,000, you will pay 1,000. That way they gather some 20-30 members and he will get 30,000 rupees and after that he will disappear. So you are paying 1,000 and you are making him become rich by paying 30,000 rupees. Because YouTube is also monitoring, right? How your account is, you created an account, fake account, and for 5 or 6 members sharing that account. YouTube knows from different devices, from different IP addresses, you are accessing from the same account. What YouTube will do? They will block the account. They consider that as a spam account and they block. That's it. Because I know, recently one person sent me one, I think last month it happened, an email ID. The moment I set the email ID, that didn't work. The email did not work. YouTube did not allow that accepting that email to give the permission for our private videos. Then immediately I realized that guy could be a spammer. Spam. So be careful. Protecting your IDs are very, very important. You may think I can create several IDs in Gmail and all. You can create several IDs, but you can't create from several machines, right? If you want to create 100 IDs, you have to use your existing either mobile phone or your computer only. When you are creating so many IDs and you created and those IDs are accessing from different machine at the same time, YouTube algorithm is very clever. They block that ID. This is one of the reasons why some of you might be knowing why all of a sudden my ID is not stopped working. Because you shared your ID with several people and it is getting blocked. So finally what I am trying to say, focus sincerely on your trading rather than focusing all these small things. Here most important thing is it's not about how much money you are saying that you are paying for taking the subscriptions. You should focus on how much money I am going to earn. That is important. Focusing on the main thing and focusing the other things, what is the thing you will get? That is such kind of focus will be done by the scammers. Not you. You are all sincere guys. You means the person who is sincerely learning the concepts, practicing, did the paper trading, understood all the concepts. So you should focus on that. And one more thing is, I got update from Mani is, there is another person, because Mani has giving advices to some people, right? So another advice he has given when he interacted with a person. I think one of our premium subscribers, he did not use stop loss. I'm surprised by seeing that. See, why I said I'm not comfortable with options? Because the risk management is not up to the level I am expecting. That kind of management I am not able to do with options. That is for my personal style of trading. I am not comfortable mainly because of the risk management point of view. I also already told you sometime before in this video, I am very strict about the risk management, following the risk management. I am very strict. Not only me, everybody should follow the same way. That's why in the lesson 5 itself, I introduced risk management. Generally, people will be teaching risk management at the end of the training course. But I introduced in the lesson 5 itself, I know how important it is. I know how important it is to protect our capital. Even though our trade is stopped out, still we should not lose much amount. The money you lose should be very small, not more than 2%. That's why several times I focused how important the risk management is. Despite the fact you learned all these concepts from me. Maybe the person could not have been completed our course. Maybe he could be the one learned outside, ignored all my topics. Maybe that could be another reason, whatever it is. And one of our premium subscribers did not use a stop loss. A trade hit the stop loss and he did not exit the trade, and still he is watching, hoping that prices will be recovered and again he will get the profit. That is the way he is thinking. After that, prices further went down, and he said he got a huge loss. And that person interacted money, and money is giving his own advices to him. Don't take, money's responsibility is only to help you, whether you got access to your mail ID or not, that confirmation. And he should help me to check your receipts and give the confirmation. Whoever the persons paid and those Gmail IDs, he should hand over to me. So next time when I upload the videos, I will be using those Gmail IDs while I am uploading my videos. That is what his job. Don't interact with him beyond that. Probably you are a much better trader than him. Then why you want to take his advices? Then what is my role? If you are taking advices from money, then what is my role here? Why I am here then? I am communicating with you in two ways. One, every day I am replying for the people's at least high priority I am giving. People are asking any genuine questions. Because every day I know so many people will be commenting. Any important questions, immediately I reply. They are the general comments. Probably next time when I get free time, one by one, I will look into, at least I will keep some 1 hour time or half an hour time. I will start replying everything. See, every message get a reply from me. Either immediately or after some delay, or maybe a delay of 1 or 2 days maximum. But definitely I reply. The another way, you don't want to communicate through YouTube. You want to send a private message. LinkedIn is there. Why I chosen LinkedIn, I already told you. What is that I told you? LinkedIn is a professional network. At least I know who are the real people, who are the fake people by seeing your profile. Some of you people may say, okay, I don't have LinkedIn network. So to communicate with you, I am creating a new account. Some people say this. The two reasons, maybe it is a genuine, maybe to escape, probably he is giving some kind of excuses, maybe he is a fake guy. Either way it is possible. At least if you are a genuine person, when you are creating a new account, provide the complete details about you. If I have any doubt, I want to contact the agency to inquire about you, at least he will tell whether your account is really a genuine or a fake guy. Because I should be careful. Because I don't want to get into, or I don't want to get caught by the scammers. I also will be taking my own precautions, right? When you send a link, that link is having some virus, anyway my systems will be detecting that. But even then I am saying, I don't want to give such kind of chances to anyone. So this is the reason why, make sure your profile should be complete proper. If you created a new account, provide each and every detail in your account. Provide your real name, not the fake name. This is not a Facebook account or Insta account to keep nicknames. Your real name should be there. Your place should be there where you are living. And your education background, all the details you have to provide. Where you studied up to 10th standard, +1 and +2, where you studied. Your engineering or MCA or any other degree, where you studied. Provide the details in your account. And your work experience details you have to keep. Because it is a professional network, LinkedIn. All your genuine details should be there. Anyway, who will be accessing your accounts? Recruiters only will be accessing. And whatever the details you provide, you are not providing any private details on the LinkedIn, right? You provide only public details only. Because all the employee details will be maintained in the public network only. So make sure you are a real guy, not a fake guy. So that way you can communicate with me rather than you communicate with money and taking his advice. Even I told him strictly not to provide any advices to anyone. His job is just to verify your payments, and then his job is just to help you to get your access or not. That's it. Nothing more. People should do your own jobs. See, you are a student. What is your job? Learning here. Okay, now you are no more a student. You are a trader. What is your job? Make use of the reports and get better trades. That's it. Other than these two, if you are involving the other activities, I can't engage you guys. Please understand. I am here not to engage you. I am here just to help you to improve your education knowledge. I am here to provide you software services. First of all, I don't have much interest on education side also. I am providing supply demand zone training mainly because to promote my software. I don't have any other special interest to become a technical analysis. I don't have any interest because many people are asking, analyze that stock, analyze this stock. I want analysis on so and so stock. If any time I am accepted your request, means maybe I have good trust on you. I believed you are a good guy. I believed your profile is perfect. I believed I know better, at least better information about you. So I don't want to make you feel unhappy. At least one day I will be fulfilling your request by analyzing. Previously I remember some people asked me, analyze gold or analyze Bitcoin or analyze NIFTY. So I did their request because I have some respect on them. At least I know better information about them. At least they interacted with me. Why I am not giving sharing my personal mobiles with everyone? Is there any harm? There is no harm. But why I am not sharing? Because I don't want to get any disturbance. Because if the whole day I will be busy. Busy with my software development, or busy with preparing your presentations, or busy with my trading. Where is the time to interact with you? I don't have any time. And all activities I can't do also every day. Sometimes I have to sacrifice. See, sometimes when I am busy with trading, I have to sacrifice my software development related activities. Sometimes any important feature I am developing, that time I have to sacrifice my trading activities. And every day we are providing services. We can't sacrifice, right? Because when you paid the money, we have to provide services to you. At least sometimes I delay in the weekend reports. Instead of Friday, sometimes maybe I may provide in Saturday. That is okay, at least. You will also accept that. But continuously I am not sending a report. Monday I did not send, Tuesday I did not send, Thursday I sent. Again, Friday I did not send. Next report I send you on Tuesday. Do you accept? Actually, I promised only 15 trading reports I will be publishing in a month. That is the agreement between you and me when I explained in the video. But am I limited to only 15 videos? No. All the trading working days I am providing. Why I kept that limit? In case of emergency. We don't know when the emergency situation comes, right? So during the emergency situation, at least you will also understand. When we started this service in the month of August, so we have completed 6 months. 6 months, even a single day without sending report. So only one day I didn't send the full report. That at the time some family function was there. At least at that time I sent you the daily and 75 minutes high liquidity zones. There is one more day. The budget day, there was a trading session on Saturday. Even I don't know about that, I ignored. And I think most of you also, many of you ignored. Otherwise, one of you would have sent me a message. Either through my LinkedIn or maybe in the YouTube comment section. At least people will remind. When there is a special trading day, one of you will send a reminder message. Tomorrow there is a special trading session is available. But last budget day, nobody sent a message. Even I did not, because I was busy with the whole day recording and everything. Not even looked into the news. Next day when I am recording the video for the previous days, for Friday's video I am recording on Saturday. Suddenly I saw market is started moving. I was surprised. Then immediately what I did? Daily and 75 minute zones I recorded and I sent you. Even though the report was late, still at 11 o'clock we got opportunities, 11:30. At least you would have got, some of you would have got profits from those zones. That much dedication I am giving while publishing the reports. Because you people paid money. That is your hard-earned money. You won't get money simply. Nobody will get money in a simple way, right? I must respect every rupee you are paying. You should also respect when you are spending every rupee you are paying to me or wherever you are spending. But many people I have seen, they are very careless. Why careless? When you are analyzing, you are not analyzing the stocks properly. You are not using stop loss. Because we started this discussion because somebody did not put the stop loss. Without stop loss, he did the trading. When you do such a careless way, when you do the trading, how painful it is to hear such kind of statements. I feel very bad because you are all trained here. I told how important the stop loss is. Lesson 5 itself, early stage of your training itself, I introduced the risk management system in our course. If you are not in a position to accept that loss, don't trade in that stock. If you are not in a position to accept any stop loss, go away from your trading activities. Don't do trading. Do some other work. Only those people who accept that minimum risk, that is our stop loss, only eligible to trade. If you are not willing, if your mind is not accepting, you are not eligible for trading. Why? Because before taking trade itself, you know the potential loss. You know. That is the beauty of our supply demand zone price action. This much amount of money I am going to lose if my analysis is wrong. That is what you know. If you are not willing to accept, in case if your stop loss is hit, if you are not willing to accept, then why are you taking trade in that stock? See, there are only few instances only, rare instances only, after hitting the stop loss, prices will go down and then it will recover. Very few instances. In the last 1 year, only 3 times it happened. In the stopped out trades, last 1 year, only 3 times after hitting stop loss, prices dropped a little below and then recovered. Out of these 3, the 2 incidents happened in the recent time, last 1.5 to 2 months period only, those 2 incidents happened. One incident happened almost some 7-8 months back. That's it. In remaining all situations, once the stop loss hit, prices moved down sharply if it is a demand zone, or moved up sharply if it is a supply zone. When you know your stop loss is hit, prices after that they move very quickly. When you are aware of that point, then why are you holding? If your mind is not accepting, don't trade. That's why I am also taking a decision. Those people who are trading like this, I don't want to give any subscription. From this month onwards, I took this decision very strictly. People who are without disciplined, without doing, because the money what you are paying is not really, it's not really most, of course every rupee is valuable, but what I am trying to say, I am not providing these services to get money from you. That is not my objective. I am taking money because I am providing services. Not for money point of view, I did not start this service. I started this because my people should know about my software. I started this service because you should be more serious when you are doing the trading. When I provided 1 year, many people I realized it, they are not very serious. But today when you are paying 5,000, most of you, I would not say 100%, but most of you are very serious. Putting good effort, spending time, very serious about getting profits and all. That was not the case when I provided free services for these reports for 1 year. People just like that they took and they didn't understand the importance of these reports. They are thinking that, okay, in any concept we get the profits. That is the way people, they were very light. It's like what to say, the right word is, there is no seriousness. Now whoever is paying, now they are having a lot of seriousness. But still making mistakes. Okay, making mistake is okay. When you make a mistake, you learn from the mistakes. If you are not learning from the mistakes, then probably trading is not the right option for you. You are not following the fundamentals, trading is not the right option for you. When you really wants to become a successful trader, your discipline is very, very important. If you are not disciplined and you are not following the rules, then trading is not the right choice. At least I can say NeoStock services are not right for you. I don't want to provide my services. Come on guys, without you are not following stop loss, how do you expect you will be a good trader? I'm not at all happy with this kind of trading. You are not following, and you are sending message to money, and he is giving some advices, or he is what does it mean? First of all, you are not supposed to send a message to any issues. You send a message to me, to the YouTube video or to my LinkedIn. If you don't have a LinkedIn account, create a LinkedIn account. Maybe sometimes some people may say, okay, we created an account, but it is not allowing to send you a request. Then at least it will allow you to follow me. You can follow. If anybody who is following me, I am sending the request back, thinking that probably they are my students, and I am sending a request to them. That way you get a request back. Or you can do one thing. You send your LinkedIn ID to money. This is a maybe better choice. Send your LinkedIn ID to money. Create a LinkedIn account. Send your LinkedIn ID to money, and I will send request to you. Once I send the request, you accept the request, then you can send message to me. Maybe this is a better idea. Send those who wants to send a LinkedIn, in case if LinkedIn is not allowing you to send a request, send your LinkedIn ID to money. So I will send you request. After that you can accept the request, and then you can send message to me. But remember, when you are sending LinkedIn IDs, make sure you are a true professional. I should not feel your account is a fake account. Always people say first impression is the best impression, right? If you want to impress, if you want to get a good impression at my side, your account should be appropriate. By seeing your account, immediately I should not get an impression. Okay, maybe it could be a fake ID. Even if you are a genuine guy, many days that impression will be there in my mind. Hope you understand why I am giving so much importance to this point. Who knows, sir? If I feel you are a very, very genuine guy, later on I may share my contact number or anything in the coming days. At least I should get 100% trust on you. Then only I can share my details with you. Okay, this is about NIFTY. Now let's move on. Already you land a NIFTY, you captured 170 points. You got an opportunity to capture. Okay, after that this is violated, right? See, have you noticed this 5-minute supply zone again? Now all of a sudden this is acting as high liquidity. Why it is acting as a high liquidity? Maybe institutions created this zone with a huge order flow because they know that there is a zone is keep on holding the prices. They decided they want to violate. Definitely they should add more order flow. Simple logic. So that's why I looked into this 5-minute zone. See, this 5-minute zone, gave you first opportunity. If anybody missed, again second opportunity. Either side you would have got, and once again it pushed the prices. Maybe you might have got another maybe 100 points or maybe 80 or 90 points move you might have captured from here to here. Again at the time of closing, once again, but this is almost closing hour, we can ignore this. At least you got trade opportunity. First trade opportunity from the high liquidity zone. Second trade opportunity, the dynamic zone it is created. Dynamic zone means in the live market the zone is created. It could have given you another short opportunity here. But below we have a fine-tuned 3-minute zone. This is the area, might have, but I don't know, buffer is good enough to get our trade executed here. I'm not sure. This 3-minute zone I already explained on when 14th or 17th January video. The monthly zone analysis, NIFTY analysis video is available. Please look into important strategies and playlist, important strategies and analysis playlist. You can find that video. I don't know how many of you attended that video. If you attended that video, you know that day we have fine-tuned this zone, this 3-minute zone. Okay, from there only prices are started moving. Maybe order flow might be strong here. Okay, this is about, but one more thing, below this zone, we have a 5-minute zone is available. Let me go to 15 minutes. There is a 5 minutes high liquidity zone. Below this daily demand zone. If this daily demand zone, below there is a 5 minutes high liquidity zone. Maybe it may act as a trap for this daily demand zone. This daily demand zone is there inside monthly demand zone. Okay, now let's get into HLQ zone analysis. Today we got trades from two stocks. First one is KEI. The KEI Industries is a daily high liquidity supply zone. It gave 3 trades today. 2 are stopped out and 1 is successful, and that successful gave very good profit. First of all, how our software identified this zone? As a drop, 1, 2, 3, 4, 5 base candles. Medium size candle is also part of the base. So total 6 candles in the base and then a drop candle. This is how our software identified this zone. And this zone, you see drop candle and another drop candle in between, generally higher wick to lower wick, order flows will be very strong, right? But unfortunately today it is easily violated. But anyway, many times such kind of zones give very good profits, but not today. Okay, how I fine tune these zones? With 75 minutes time frame. See, the zone we got is between those 2 leg candles. This is the zone. This is a drop, base, drop. This is a 75-minute zone. There is one more 75-minute zone, drop, 2 base candles and a drop candle. And these 2 75-minute zones again fine-tuned with 5 minutes time frame. Sorry, 15 minutes, not 5 minutes, 15 minutes time frame, drop, base, drop. This is a 15-minute zone. And here also, here you have a rally candle, 2 base candles and a drop candle. And also at the distal line of this 75 minutes fine-tuned zone, we have a rally base drop. This is the origin. This is the 15 minutes origin to this 75 minutes fine-tuned zone. Of course, we should find a fine-tuned 5-minute zone to plan a trade in this origin. Okay, anyway, now we are in the 15-minute zone and we have 3 order flows identified. Now we need to fine-tune with 5 minutes time frame. Go to the 5 minutes time frame. 5 minutes time frame, it looks like we have a drop, 2 base candles and a leg candle part of the base and drop. But if you draw a zone, entire 15-minute zone is going to be your 5-minute zone. You can't plan your trade. But did you notice here? A rally base drop. This rally base drop 5-minute zone is an origin to this entire fine-tuned 15-minute zone. This rally base drop origin for this 15-minute zone. So this is the right area you can plan your trade. This failed ERC has a leg in, base, drop. And what about here? Here also the same case. If you consider drop, if you consider 3 base candles and if you draw, this entire 15-minute zone is again a 5-minute zone. Risk management is not possible. You can't plan your trade. But see here, you have a drop, base, drop. This 5-minute zone is the origin for this entire fine-tuned 15-minute zone. And see here, within this 15-minute zone, origin, you have a 5 minutes fine-tuned zone that is also acting as an origin. See here, you have a drop, 2 base candles, a medium-sized candle could be part of the base, and then drop and follow through candles. And this is a fine-tuned 5-minute zone inside the 15-minute zone origin. And also, this fine-tuned 5-minute zone is also an origin to this entire 75 minutes fine-tuned zone. This is the 75 minutes fine-tuned zone inside daily zone, daily high liquidity zone. For that 75 minutes fine-tuned zone, this 5-minute zone is the origin. Moreover, this origin is inside 15 minutes origin. That way this order flow is much stronger compared to the remaining 2 origins. But many times we have seen origins have very good success rate. But today, unfortunately, All are horizons only. See here, this is a 5-minute horizon to 15-minute zone. This is the 5-minute horizon to the 15-minute zone. And this is the 5 minutes horizon to 75-minute zone. Only difference is, this is the horizon to the 75-minute zone. Remaining two horizons are to the 15-minute zone. And these two 15-minute zones are easily violated today. See today what happened? Immediately the first one is violated. First 5 minutes candle. Next 5 minutes candle, the second horizon is also violated. And then prices entered into the third one with small buffers, small entry buffer. Your trade would have been executed. After that it pushed the prices. Here you have 15 minutes zone. But today here we have a strong support. That support holded the prices for several time. Almost from 10:10 to 11:25, more than 1 hour. 1 hour, that means close to 1 hour or 1 hour 15 minutes. Price stayed here only. So definitely at some point you have to exit your trade. So again they are reaching and moving up. Again coming, moving up. Again coming, moving up. Maybe here you can draw some 1 minute zones or 5 minutes. 5 minutes also you can draw. See here, drop base rally. This is acting as a 5 minutes high liquidity zone maybe. See here only it is a prices reached here, again moved up, again reached, again moved up, again reached, again this time big move. Almost I thought it is giving a second trade, but it didn't reach. Again prices came down from here only, moved up, again here, again throughout the day. Last candle finally this zone is pierced. But anyway, we can't wait up to here, right? Already 1 hour we stayed here. So that's why my focus is not based on the zone, but it is based on the support line. You already know support and resistance lines. This support line is strongly holding. Probably this is the right place to book your profit here. But meanwhile, these 5 minute zone and this 5 minute zone both are violated. So how much profit it has given? First, how much stopped out trades has given? The first trade, 5 minutes horizon, the 5 minutes lower time frame horizon to the fine-tuned 15 minute zone, which has given 1.1% negative ROA. That is 1582 rupees. Second one, 1530 rupees. Almost same value, similar value. And here also same, minus 1.1% ROA. Maybe it could be minus 1.13 or something. Maybe this is minus 1.10 or something. Almost same. Some decimal value difference only. Okay. And the third one, the one that actually reached the 5 minute horizon to the 75 minutes fine-tuned zone in the HLQ zone. That has given 13,657 rupees profit, which is 9.5% ROI. So this is the excellent trade. Just imagine you took a trade here. It hit the stop loss. You didn't book your, you didn't exit the trade. You are hoping that prices will reach. Prices were moving. So because your money is struck in the trade, right? Do you take another short trade here? No, you can't. You are hoping that it will reach. But is it reached? No. Assume you booked your profit here. How much money you lost? 1582 rupees. Again, second one is also stopped out. Somewhere here you book your profit. How much money you lost? 1530 rupees. Okay, now your money is released. Now within next few minutes, immediately it reached and you got a trade here. Now your trade successful. Prices were going down, going down, going down. And finally it reached this area. This is the area you waited for some time, maybe some half an hour or 45 minutes you waited. Multiple times it is holding. Finally you realized somewhere here you booked the profit. How much profit you got? 13,657. Now, look into the calculations, you will understand. If you don't book the profit, if you don't book the stop loss, what will happen? This is a classic example. Especially the person who sent message to money, please listen this video carefully. It is an important lesson for you. 13,657 is the profit. How much loss we got? The earlier trades 1530 minus 1582, including stop buffers, everything I calculated these values. How much profit you got? 10,545 rupees profit you got. After even then you got 2 trades are stopped out, still you got 10,545 rupees. So what is the ROA you would have got? 9.5 is this ROA minus 1.1 minus 1.1, that means 2.2, both together. Still you got 7.2% ROA you got profit. Now look into the second scenario. You took a trade here. Prices moved, you didn't book the profit. Your stop loss is a hit. Even then you didn't book the loss. You didn't book the loss. Prices went. Anyway, you won't take a new trade here. Anyway, you won't get a new trade because you are already in the position. Finally, prices are moving up. Still they didn't reach you. So almost near closing the market hours, you finally whatever the loss, you booked the loss because the day is going up. Now how much loss you get? See, this is you book. This is our entry price, right? 380410. See, when you book the profit here at the end of the day, if you hold the price, many times where you book in reality, you book your loss here. Because prices are moving, further moving, your loss is increasing, definitely you get a lot of fear. Here you book your loss. Still, I am assuming, okay, you have a lot of patience. Waited till the end of the day. You have such a patience. Then before closing, somewhere here in this blue color line, whatever the one, actually you are supposed to book profit for this trade, third trade. But there you book the loss. Let us assume you would have got 37 rupees loss on each stock. What is the KEI? I think 150 or 125? KEI. I think 150. Let me see. $150 into 150. 5,000 rupees loss. Instead of getting loss 1,530, you got 5,000 rupees loss. Actually, you are supposed to get 10,000 rupees profit today. Even after getting these 2 trades stopped out, still you would have got 10,000 rupees profit. Instead of getting 10,000 rupees profit, you got 5,000 rupees, 5,557 rupees loss you would have got. Into 100 divided by, what is the margin? 1,42,335. So by the time price reached, some more price will go down. So definitely it could have been 1,42,000 rupees. So into 100 divided by 1,42,000 approximately. What is this? Something wrong. Why this much? 5557.5 into 100 divided by 1,42,000. So 3.9% money you would have lost. What is the maximum accepted risk as per our concepts? 2%. But what is the loss you would have got? 3.9%. The whole day your capital is struck. The opportunities that gave you profit, you missed it because you didn't clear your stock, because you are still holding the loss. See, the biggest problem not booking the profit is not booking loss. The biggest problem for not booking the loss is Your money will struck up the whole day until you close the trade. See, just because we compromised for accepting this loss, I repeat, just because we compromised for accepting this loss, you missed a great opportunity to earn 10,000 rupees today. These are the biggest blunders we do in the initial stage. Accept the loss. This is your mindset. The problem with the mindset, if you don't change the mindset, always you have to think, if I don't book the loss, my money will struck. I may get more loss. My money will struck up. I can't take my next trades that may give profits. That is the way you should start thinking. Then only you will accept. And then you book the loss when your trade is stopped out. That's why from the beginning I am saying we should be very strict about the risk management. Risk management only helps you earn good money. Second thing, accuracy. Accuracy means how well you are understanding your concepts and fine-tuning the zones. Mostly fine-tuning the zones, 80% level, what I am doing, same way you can able to do. There won't be any issues. But nowadays accuracy is coming because your brokers are not using dividend adjusted data. And still you are using their wrong data charts and you are analyzing wrong data. Rather than analyzing the wrong data, don't trade, stop trading. If you analyze wrong data, your trades will be stopped out. Simple. So don't analyze the wrong data. See, always use stop buffer, always use some entry buffer. See, maximum accepted entry buffer is 0.1%. If not 0.1%, at least half of 0.1% you use, 0.05%, right? 0.05% at least you use stop buffer. Entry buffer. Because many times, what happens if you don't use entry buffer, your trades may not be executed. Make sure you are always within the risk management. I will show you one stock today. It's a very successful trade, but we can't take the trade. We feel like very bad. Maybe I would not have used risk management. I would have blindly taken the trade. That kind of feeling you will get by seeing that stock. But we can't take. It is against our rules. Because some of you are ignoring. Because you are believing HLQ zones 100%. Don't trust HLQ zones 100%. Trust only 80% only. Sometimes you might be in the 20% zone, related zones you might have taken a trade. That day your trade will be stopped out. You have to exit, you have to book with loss. So that's why I am saying do not trust HLQ zones 100%. Why I am always saying only 80% success rate. No concept will be 100% work in the market. After doing so much research, at least this much level we fine-tuned. That's why you should strictly follow the capital stop loss. Otherwise, your capital will be just like that, it will go. Why stop losses? To protect our capital only we are using stop losses. And ignoring, and you are just making mistakes. Feeling very bad to hear such kind of incidents from your side. Okay, KEI is one. Another one is HR motor. HR motor is also, it is 75 minutes high liquidity zone. Earlier the one we have seen is the daily. This is 75 minutes. How our software identified this zone? Our software identified this zone as a drop, 2 base candles and a drop candle. This is how our software identified this zone. Okay. This drop 75 minutes zone we fine tuned with 15 minutes time frame. Look into the 15 minutes time frame. Here we have a drop 1, 2, 3, 4, 5 base candles and again a drop candle. This is the 15 minute zone. This 15-minute zone again fine-tuned with 5 minutes time frame. In the 5 minutes, see, you can also draw, this is a leg in, 1, 2, 3 base candles and drop. But risk management point of view, I consider, okay, this itself is a big candle. Let me consider this as a failed ERC. This is the base and drop. But what happened today? It is violated. Okay, for some time it gave us some resistance here, not good enough to push the price. But in the next candle, the zone is violated. That means our trade is stopped out. But this 75 minutes zone is also having an horizon. See here, we have an horizon here, rally, 3 base candles and drop, and this is the one holding the prices. This is the one again, prices reached close to the distal, but it is not violated, close to the distal line, came down, and next time again prices entered into this zone. Now what happened? Again a drop base, drop is rally base, drop is created, and prices came down. And entire daily 75 minutes high liquidity zone is created. That means this is the lower time frame zone horizon to this higher time frame 75 minutes high liquidity zone. The high liquidity zone horizons, many times they give very good profits. Previous example we have seen fine-tuned zone horizons. But this is not a fine-tuned zone. This is a direct high liquidity zone. And this horizon is for the high liquidity zone. High liquidity zone horizons are having even much higher success rate compared to the fine-tuned zone horizons. Of course, fine-tuned zone horizons also have a very good success rate, no doubt in that. But compared to that, the high liquidity zone horizons are even much more powerful. And more interestingly, see, when prices went so deep, next time it got success, immediately, what happened? Some doubt arose in my mind. It went very deep. How second time, without going deep, here itself it worked very well. And moreover, this horizon pushed the prices down. When I got that doubt in my mind, what I did? I went to 3 minutes time frame. Now you see the magic. A 3 minutes horizon is created here. You see? You have a rally candle, you have a base candle, you have a drop candle. That means almost the same horizon, whatever we have drawn in 5 minutes, same depth. The same depth, the order flows are created even for this zone. Rally, base, drop. You got it? Now we delete the previous one. If you draw, same zone only you get. Same height, high and low values. So from this 3 minute horizon, it picked up the orders and came down. But actually the source is, this is the main source. The 3 minute zone, you added a new order flows in this zone. That is how you should understand. I should not say this is the reason. The reason is 5 minute zone only. But sometimes to get justification to your analysis, you have to do that kind of a deep analysis, so that your confidence will be more when you are planning your trades. See here, today price entered into the horizon at 9:45 minutes candle. It went maybe some 10 paisa inside the zone it went. Generally you keep entry buffer. Even without entry buffer also your trade will execute. That is what I am trying to say. And then sharply prices came down. Within 1 hour, your trade is completed. In just 1 hour, your trade is completed. And moreover, till this 15 minute zone, how much? 1:4 RR it has given. We have a 15 minute zone here. So here you have a rally, base, rally. This 15 minute zone it reached. And that way, HR Motor has given 15,000 rupees profit, which is 9.7% ROI. The earlier stopped out trade, it has given 1864 rupees loss, which is a minus 1.2 negative ROI it has given. Still you would have got 8.5% ROI you would have got. If you would have taken both the trades, first stopped out, next the successful, still you would have got 8.5 times, 8.5%, not times, 8.5% ROI you would have achieved today. See, this is the importance of exit the trade when your stop loss is hit. You need to book the loss. If you don't book the loss, the other opportunities you will be missing because your money is struck. Why we have to book the profit? This is the main reason. Of course, it protects your capital because small amount only you will be losing. It won't hurt your overall capital. That is the first advantage. Second advantage is, and the most important advantage is, your money will be released the moment you book the loss. And that money you will use in some other stock. That way, whatever the loss you got earlier, it will be recovered in the next trade opportunity you got in the other stocks, or maybe the same stock itself. Both the cases, same stock we got the opportunities. Second one, even see 2 trades stopped out. When 2 trades are stopped out, your emotions will burn, right? Your tensions will rise. You may think, do I need to take this third trade or do I need to avoid? That way your mind might be wavering from whether to accept or not to accept. You should accept. I remember some 8 or 9 months back we have seen an example. 3 trades are stopped out from the same stock, and the fourth, the zone is having 4 order flows. 3 trades are stopped out, and the fourth one is executed. And that too, first 3 stopped out trades are fine-tuned zones, and the fourth one successful trade is a aggressive trade setup. That is the way institutions might have set the traps. Sometimes it will happen. See, if you are losing the money, how much money you lose? Small. When you get the money, how much money you get? Big money. With that successful trade, whatever the small losses you got, you get the recovery, and still you get a good profit. That's why always try to book the loss when your trade is stopped out. See, it's like booking the loss is nothing but you are saving your capital. That is the first point. Second point, you are releasing the money. The money will be released for our next trades. That means our capital will be ready for the next trade. If you did not book the loss, your capital is totally struck in that last trade. So that's why don't do such kind of mistakes. These are the classic examples. Booking the loss, how it could have helped us to get the profit. See here, it's an interesting title. Booking the loss, how it would have helped us in getting the profits. These are 2 are very classical examples. That's it. These 2 are, we got successful trades, and I told you another successful, but we did not get the trade is, what is that? Stock. Is it Davis Lab? Is it? Let me check. No. Is it Cipla? No. Yeah, Cipla is the one. It looks like stopped out, right? We have a horizon here. The 5-minute horizon to the Cipla. Go to the 5 minutes time frame. The remaining order flows are not good within this zone, but we have an horizon here. Excellent horizon. Rally base drop, follow through many days. This zone tested, acting as a high liquidity zone. Is it stopped out? Looks like it is stopped out, right? But go to the 1 minute candle. This is the morning 9:15 trade. See, morning 9:15, 1 minute candle. Morning 9:15, 1 minute candle, whether it is success, whether it is failure, we don't bother. We don't take. And we ignore this. Maybe sometimes because of freak trades, it looks like the zone is stopped out. We don't know. But anything, once the chart reflected, the order flow is gone, we don't look into that stock. It is a quite risky. Really it went and stopped out, or because of freak trades it is stopped out. We don't know. We don't have that information. Better to leave that stock. We have so many other stocks also, right? So that's why we don't focus on this kind of stock. So Cipla is no more a valid zone for planning the trade. And Bajaj Auto, this is a 75-minute zone. No, we did not get. And Bajaj Auto also did not fine tune. That means 15-minute structure is not good. Why 15-minute structure not good? See here. You have a drop candle, you have another drop candle, in between no base candles. Such kind of zones will be violated easily. Okay, all are discussed. Divi's Lab I didn't explain. Let me finish that also. Divi's Lab 75-minute zone, we have drop base drop. See, today it looks like prices went right, but that is happened in morning 9:15 1 minute candle. So we don't consider 9:15 1 minute whether it is successful or failed. Look into the 15-minute zone. 15-minute zone is also same zone. 75 and 15 are same. You draw from here to here, same 75 minutes, 15-minute zones are same. Look into the 5 minutes. 5 minutes is also almost same. But type 2 proximal level we have drawn. That is the only difference. We have a failed ERC candle, drop candle. We have a base candle. What is this? Sorry. This is 3 minutes, not 5 minutes. That is what I'm wondering something. We have a drop, we have 1, 2, 3 base candles and a drop candle. But anyway, you can't plan trade also in this zone because of heavy risk management. Leave this. Next, Polycap. This is a daily high liquidity. Supply zone. Yes, this is the one actually I want to discuss with you. This is a daily zone, drop, base, drop. This one I fine tuned with 75 minutes time frame. We have two 75 minutes order flows here. The first one is a drop, 2 base candles and drop. Second one at the distal line. See, the distal line of the daily zone, we have a drop, 2 base candles and a drop. That means this 75 minute zone is the origin to this entire daily high liquidity zone. Even though it is the origin, but the real order flows are inside the zone only, not at the origin. Now go to the 15 minutes time frame. In the 15 minutes time frame, here the structure is not good. But here inside the zone structure is good. We have a rally, 1, 2, 3, 4 base candles and a drop candle. 15 minute zone inside the 75 minutes structure. And also here also we have a leg in, 2 base candles in a narrow range and a drop candle. Okay. Now these two 15 minute zones again fine tuned with 5 minutes time frame. And here you see you have a rally candle, 4 base candles and a drop candle. This is a fine tuned 5 minute zone within the daily high liquidity zone. And also here also you see you have a drop candle, 3 base candles and a drop candle, type 2 proximal. Or if you convince this is I can consider as a leg in, this is a base drop. Either way, okay. Anyway, it is a drop, base drop, or maybe rally base drop. Either way it doesn't, but all these are all base candles only. Fine. Maybe this is a little bigger than the remaining candles. Or even you can consider, in case if you are convinced this is a base, this is also okay. Rally 1, 2, 3, 4, 5 drop. Either way, it doesn't make. But this is the area, fine tuned 5 minute zone. See what happened today? Prices entered into the zone, fine tuned area, and then sharply how they came and reached the target. And when you got the trade, morning 9:35. When it reached the target, morning 10:15. That means within 45, your trade is completed and reached the 15 minutes target. Go to 15 minutes. See here, you have a drop base rally. 15 minutes target it reached within 45 minutes. But why we didn't take the trade? The reason is the risk of this zone is beyond 2%. When the risk is beyond 2%, what you have to do? If the risk is beyond 2%, you can't do the trade, take the trade. You have two options. Option number one, you adjust the entry until you get 2% risk. Then only you plan your trade. See here, when I adjusted, I have drawn the blue color line. Till the blue color line, if I draw, now the risk is exactly 2%. So 1.96%, that means almost 2%. Exactly 2% risk is there. So in case if my trade is stopped out, 2% loss I will be getting. But what is the problem here? Sometimes prices may not be reached your fine-tuned entry. If that is the case, you will be missing the trade. So that way, see here, prices did not reach up to the blue color line. See, they went up to here. Let me draw another line to understand where they reached. See, the first blue color line it reached and then came down. But where we want to plan our trade? In the second blue color line. Prices did not reach. If they did not reach, you can't take the trade. Because the blue color line, if it reach, then only you get maximum accepted risk 2%. Below, your risk will be beyond 2%. So that is the reason why you can't take this trade. Okay, now you can say there is another solution we can take the trade. What is that? Trailing stop. I can go for trailing stop loss. Okay, before that, in case prices reached this blue color line, what is the RR we would have got? 1:4.1. RR we would have got 4.19. That means almost 1:4.2. If prices reached this blue color line and then came down to the target, we would have achieved 4.2%. RR we would have achieved, but we didn't get the trade. Now you may say another thing. What is that? Without adjusting the entry, I can plan my trade as per, what is that? As per position sizing. As per the position sizing, you can plan your trade. As per the position sizing, you can plan your trade. That's a good option, right? Intraday also you can do position sizing in the cash segment, you can do position size intraday. But delivery you can't do position sizing for the short trades. But intraday short trades you can, because your broker is giving margin up to 5 times. But after position sizing only 3 times margin you take. That way we invest less capital. Remaining capital we will block. That way on our total capital risk will be within 2% level. So can we plan our trade like that? Yes. If that is the case, where you will plan your trade? You will plan your trade at the entry. Because you don't know how much up it will go. If you maybe just touch your entry and it will go down. That's why probably you will be planning your trade somewhere here. Or maybe little entry buffer you will add. Okay, for this example, discussion, I am not even adding even entry buffer. Exactly at the proximal line, type 2 proximal, we are planning our trade. That means this is your entry. So if you would have taken, this is a successful trade, right? Okay, then did I register the data here? No. Why? See here, another important thing. If you position sizing, that doesn't help you. Where you are taking your trade, from there, where you are booking your profit, from there, from here to here, minimum 1:3 RR should be there. 1:3 RR. So what is the RR we are getting? So let me move this down till the second blue color line. What is the RR I am getting? 1:2.46. This is the reason why even position sizing technique is also rejected. See, this is kind of analysis you have to do. It looks like it is a successful trade, we got a good profit, everything we feel happy. But actually in reality, this zone After position sizing, you won't get 1:3 RR, you won't get. You are getting only 1:2.46. That means 1:2 and half, 2.5 RR you are getting. Maybe experienced people can take 1:2.5 RR. Experienced people, they take because they can accept a little extra risk and all. But we, initially at the beginning stage, up to some 2 to 3 years or even 4 years, sometimes even 4 years level of experience, better to depend on 1:3 minimum RR. So that way it is not an accepted trade. Either side it is not acceptable. First trade you missed. First option you missed because prices did not reach. Second option you missed because minimum 1:3 RR is not there. But if you ignore all these things, it looks like a very successful trade. Prices entered into the fine-tuned area and from there it reached the target. But every time it won't happen like this, right? If you take a trade without using position sizing everything, if it hit your stop loss, it will impact your capital. The impact on our capital should be very less impact. That's why we are focusing a lot on our risk management. Why always I am giving importance to the risk management? So that this concept will ensure your capital will not be disturbed. Of course, you get some loss, but that is a small loss. That does not hurt your overall capital. You have 1 lakh rupees, 2,000 rupees, stop, your money is gone with 2% risk. Still you have 98,000 rupees capital is there. That is a good capital for planning your next trade. This is how you have to understand. Without thinking all these things, you took a trade, hit the stop loss, but you didn't exit. Still you are holding, you are getting more and more loss. Finally you got 12,000 rupees loss. Now your capital is reduced to 98,000. If you would have strictly implemented the stop loss, your capital would have been 98,000. Now, because you didn't follow the fundamental rules, now your capital is 88,000. See the difference between 88,000 capital and 98,000 capital. How much hard work you have to do to recover the 10,000 rupees loss? Now you got only 2,000 rupees loss. To recover this 2,000 rupees loss, how much effort you have to put? Did you understand the difference? Earlier, 12,000 rupees loss you have to recover because you didn't follow stop loss concepts properly. You followed stop loss concepts very strictly. Now you have to recover only 2,000 loss in your next trades. Which is easier? First one or second one? Second one is easier. Only 2,000 only we should recover. At least we won't be having tensions much. But in the first option, 12,000 rupees, 88,000 to 1 lakh, 12,000 rupees difference is there. That much loss you need to recover. How much tension you will be having? With the tension, do you do proper analysis in your next trades? Do you have confidence on yourself? All these problems are coming because you didn't follow stop loss strictly. Because you ignored the fundamentals. Don't do such kind of mistakes. Because I want all you people should properly save your capital and good profits. Even if you are stopped out, the capital should not hurt much. That is the way, that kind of discipline you should have. Then only you will become a good trader. Remember, we are all retail traders, small traders. How careful we should be to protect our capital. So this is a good lesson for you, Polycap. And next one, Manapuram. Manapuram, I think previously we discussed this stock. Previously we fine-tuned these zones. Prices did not reach even today. So because the explanation is already completed, I am moving on to the AU Bank also we discussed earlier. No. AU Bank we did not. This is a new zone. This is a drop-based drop. This one I think AU Bank yesterday, have we discussed yesterday? Okay, anyway, this is the same. In case if yesterday we discussed, it could be the same analysis. We have a failed ERC as a leg-in. We have base candles and a drop. and this one is fine tuned with 15 minutes time frame, 15 minutes time frame. In the 15 drop base drop, and again it is also having a horizon. This entire daily zone is having a horizon. Rally 1, 2, 3, 4 base candles and a drop candle. The 15 minutes horizon. Inside 15 we have 5 minutes horizon is also there. Okay, this is a 15 minutes drop base drop. Now this one fine tuned with 5 minutes time frame. See, inside the 15 minutes fine tuned zone we have a drop base drop. This is the 5 minutes fine tuned zone. And also the horizon is also having a drop base drop. This 5 minute zone is also horizon to this entire entire daily zone. So the daily zone picked up the orders from this horizon and sharply it came down. So that way we have two fine-tuned order flows are available here. But today anyway prices did not enter into that zone. We didn't get any trade opportunity today. And the Tata Communication I didn't fine tune because it's a very old zone. In 8th June 2023, almost 1.5 year old, we won't get any 5 minutes order flows. So I just left it. Coal India is also the same case. It is also old zone. I fine tuned up to 15 minutes level. But in the recent action, we got a zone, recent action. Let us look into the recent action. In the old, it is a 15 minute zone. We don't have a 5 minute zone here. So let me explain the recent action. Go to the 75 minutes. In the 75 minutes, you have a rally candle. You have a base candle. Again, you have a rally candle. Rally, base, rally. Now go to the 15 minute zone. In the 15 minute zone, at the digital line, see the digital line. This is the digital line. We have a rally, base, rally, 15 minute zone. And within this 15 minute zone, we have a fine-tuned 5 minute zone. And this fine-tuned 5 minute zone is the horizon. We have a rally candle, two base candles and a rally candle. This fine-tuned 5 minute zone is the horizon. See, from here it picked up the orders from the fine-tuned 5 minute zone and sharply it moved up. And in between the order flows are not proper. We can draw a drop base rally, but can you handle this much risk? You can't handle. But are there any new zones are created when prices retraced here? No. Within the 75, look into 15 minutes. We don't have any 15 minute zones here. So that's why at present we believe on this horizon, or in maybe next retracement, new 15 minute zone created and it is having a fine tune 5 minutes. Then we can plan trade in the next retracement again. But anyway, today prices did not reach here. So these are the high liquidity zones. And the last one is the third topic. What is the third topic? Pierced zones. Tech Mahindra. It is a pierced zone, 75 minute zone. Previously also once we looked into this stock. Previously also we discussed Tech Mahindra. Probably I have discussed Tech Mahindra in lesson 28 pierced zone strategies. If I am not wrong, in that we would have discussed. Still, even today it is valid. Even today the zone is not completely violated. That's why it is not completely violated. Our software recognized this zone. This is a 75 minute zone, drop, base, rally. Zone is pierced and finally candles are getting closed inside the zone only. Okay, this is the 75. And in this 75 minute zone, 15 minutes order flows. Let us fine tune in the recent price action. See here, we have a rally, base, rally, 15 minute zone. This is the one. Rally, base, rally. Okay, within this 15 minute zone, we fine tune with 5 minutes time frame. See, we have a fine tuned 5 minute zone here. Rally, base, rally. Already tested once, again second time it tested, maybe working as a high liquidity zone, we don't know. Maybe it could be again a drop base rally, that way you can understand, follow through candle. Maybe a new order flows are added into this, maybe. And here, have you noticed here, we have a drop, two base candles and a rally. And this 5-minute zone is the origin for this 15-minute zone. See, 15 minutes candles picked up the orders from this origin and they moved. So we have an origin and also we have a fine-tuned zone currently working as a high liquidity zone. Let us see what happened today. See, today what happened? Morning, it entered into the zone, picked up the orders and then sharply it moved and reached the 15 minutes target. Here there is a 15 minutes target zone. That is also a high liquidity zone. See, here we have a drop, 3 base candles and a drop. This 15 minute zone is again having a fine-tuned 5-minute zone. So maybe I looked into the wrong one. Sorry, we have to, I'm talking about this one. We have a drop, base, a drop. This a drop, base, a drop. We have a fine-tuned 5-minute zone. See, rally, base, drop. Actually, it is not very convincing, right? Rally, base. Is it a rally? Do we agree? Maybe rally, 2 base candles, drop. That means entire 15-minute zone is same as 5 minutes. That's why what I did, I went to 3 minutes time frame. 3-minute structure is not 3 minutes, I think 1 minute. 1 minute I went. 1 minute structure is very clear. Yeah. In the 1 minute structure, we have a rally candle, 2 base candles and a drop candle. See, immediately it is tested, came down, again tested, came down. So every time new LOTL zones also getting created, even in the 5 minutes, within 1 minute area, 5 minute zones are getting created, new order flows. Rally, base, drop. See, today it is tested. Why I am saying? By seeing this price action, maybe you also could have planned short trade. Again, same profit you would have got. Whatever the profit you got in this trade, same profit you would have got. It's a very good profit. Again you got. Next time, see what happened. This time, this fine-tuned 5-minute zone is violated after this test. First of all, is it a valid trade? I'm doubtful. Let us see. This is 9:15 candle or after 9:15. Let us see in 1 minute time frame. You will get clarity. The first trade is really a valid trade. No, this is morning 9:15 candle trade. It is tested, but morning 9:15 intraday point of view we don't accept. Okay, fine. Maybe first trade you might have missed. But what about the second trade? Second trade prices entered into this horizon. Let's delete this fine-tuned zone. And this 5 minutes horizon, even 15 minutes also I am deleting, but it is the horizon. Now you remember. Why I deleted? So that it looks very neat and clean now. Now you see, you got the trade when at, let me go to the 5 minutes time frame. You got the trade at 9:45 minutes candle. After that prices started moving and finally reached at 11:30 candle. Because already you might have assumed this, identified this could be a high liquidity zone. If you would have gone for a short, again same profit it would have given you. This is almost last 1 or 1.5 hour trading session. Still, if you would have taken a trade, again prices moved, but this time not up to this. But any new 15-minute zone is created in while coming? Yes. See here? You have a drop, 3 base candles. Because prices reached here, you might have already taken a trade. So definitely you should book your profit here. Of course, this is violated, but at least small profit you would have got. Okay. Who is giving all these profits? Our pierced zones. The zone we thought a waste, useless zone because it is pierced. Earlier we thought like that, but now we are not thinking because you already learned pierced zone strategy in lesson 28. Now you might have understood the importance. See, why we are learning so many strategies? Because we don't want to leave any opportunity that gives profits to us. That's why we are learning so many strategies. You don't know in which time you get a particular strategy works very well. I mean, not works very well, strategies always works, gives an opportunity. Let us assume anyway today you got HLQ zone trades you got. Let us assume today we don't have any HLQ zones. Probably you might have got an opportunity in the pierced zone. That way you take this opportunity, you will get profit. Rather than sitting ideal, you will use other strategies those days where your main strategy does not give any trades. See, as a trader, we want to get more and more trades and we want to make them execute according to our trade plans. So that's why you would have got a very good trades, two trades. This is the first trade and this is the first trade. This is the second trade. This is the third trade. Third trade is a short profit. Anyway, I'm not doing how much profits we have got. Maybe now you got idea how we can fine tune. You can do the calculations. Definitely you would have got a very good profits. Because around 20 rupees profit you would have got here. That could have been a good profit for you. Maybe at least around 5% or 6% ROI we will get. Okay, this is about end of our HLQ zone. I think it's a very long video mainly because of the advices, so many advices I am giving you and so many unhappiness things I expressed. And also telling so many points where you should focus and where you should not focus. And also focus more about the fake related accounts or the other things. Lot of time. But some points are very, very important because people should know the kind of some mistakes you are making. Okay, this is end of the video. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.